Welcome back to the Boardroom Company Live, the podcast for professionals who are looking for advice on how to build their board career. I'm your host, Naomi Kent, and today I'm joined by Susan Holliday, who has served on corporate boards and has spent more than 30 years in insurance and banking. We're going to be talking about her career on boards, a little bit about the insurance industry, and also cryptocurrency. So welcome, Susan, to the podcast.
Thank you.
Excellent. Well, tell us a little bit about your career on boards, kind of how you got there, and your experience during that process.
Sure. Well, it actually started quite a long time ago. When I was the head of investor relations at Swiss Re, I was working a lot with the board and particularly the audit committee. And even prior to that, as an equity analyst, I'd spent a lot of time thinking about actually the same topics that board members do about strategy, and how to maximize shareholder value and that type of thing. And then my boss at the time stepped down from being the CFO and built quite quickly and successfully a board portfolio career. And it gave me the idea that, this is something that at some point I would like to do. And so later on in my time at Swiss Re, I put my hand up to serve on some of their subsidiary boards, which I actually did. And it was great in a couple of ways. First of all, I could figure out if I actually liked it and I was any good at it, because there are things about serving on boards, particularly in regulated financial services, that not everybody enjoys. And I'm thinking about the compliance side. And also, I had some training, so I knew what was going on. And after that, throughout my career, I had the opportunity to serve on 7 corporate boards and also a couple of advisory boards.
Wonderful. That's excellent. And I love how you sort of started on these subsidiary boards. I hear that a lot with my clients too, where, if there's an opportunity, if you're in a big company and there's an opportunity for you to serve on one of the private subsidiaries, you're usually just the shareholder, right? You're essentially the shareholder representative. Was there anything about that experience on that first board that you'd like to discuss? Anything that sort of stuck out as a learning that you brought back with you?
Actually, it was interesting because I was on 2 and they were very different. One was a UK company, extremely heavily regulated, tremendous amount of compliance in the board meetings. Fortunately, we had really good company secretaries and lawyers and so on who helped us through it. But on the other hand, they hardly did any transactions, and the transactions were so big that each one had to be signed off by 2 board members. And I remember one time, I think I was the only person in the office, that one of the only board members in the office the day before the Easter holidays. And there was this huge transaction with a German client. And so I had to go through the whole thing and sign it off. And then the other board was very, very different. It was a subsidiary in Brazil. And that was perhaps more like your typical board member experience. We were looking at how much capital the company needed when it needed a capital injection from the parent. We recommended that they get a new CFO, which they did, who actually ended up having a very good career in various roles in the company. And so that was maybe a little bit more like a typical board with the kind of added fun and challenge of being in Brazil.
Yeah, wonderful. Did you have to go down? Did you go to Brazil for the board meetings, or was there a lot of virtual meetings? How did that work?
Some and some.
Okay.
So I was kind of, if you like, representing the parent company along with another internal board director. And so they wanted us to go there to meet people, meet also some clients, and kind of keep an eye on what was going on. But some of it was on a predecessor to Zoom.
Yeah, and I know you're a very international person. Did it help that you had an understanding of the different cultures when you were on so to call it foreign board, right? Like a different cultural board?
Yes, I mean, I've been on boards in various different countries, and one of the other boards I was on actually was a PE-owned company, and their investments were in financial services in Africa. So for those ones, we went to Nigeria for some of the board meetings, and that is a very different environment and culture, but it was also kind of tremendously fun. And what I found is that you can learn things from different boards and the different ways that things are done, and then kind of take it back to the other companies. So I actually think it's a tremendous experience.
Yeah, and I'm sure sitting on multiple boards, because you've done that, right? You've had multiple board roles at the same time. Like you said, it helps you share information. And I would think also, did it help you sort of bring innovative ideas, or did you see, I don't know, different technologies being used or different companies leveraging new innovative products, perhaps, that you were able to kind of share with the other boards?
So one of the things that I definitely tried to share between boards was kind of best practices. Nice. And some of it was things just about like how to do the agenda, how to manage the board meetings, to be an appropriate use of time, that kind of thing. But there's no doubt that my wider background sometimes was helpful. I mean, there was one company that wanted to do an ESG strategy, and the board was going to sign it off, and I didn't really think it was ready to be signed off, and worked with some of the people outside of the board meetings to improve it, and then represent it. They represented it to the board, and also some of my sector experience was useful. There was one company that the board wanted them to get cyber insurance, and they thought that they couldn't, but I knew that they could, so we supported them in that, and indeed they were able to get it. So
excellent, wonderful. So it's so insurance. The insurance industry has obviously been a heavy focus for you, and it still is today. I know I've read a lot of your articles about ESG and insurance and all kinds of things related to the insurance sector. Is insurance an indicator for emerging risks? What is it around that you focus on as well?
Yeah, so it certainly can be. I mean, people think insurance is really boring. Actually, it's not, especially in the kind of roles that I had, because you really had to know about all sorts of topics, from climate change to driverless cars to kind of societal developments, how long people are going to live, really a wide range, new technologies, a wide range of topics. So I do think that insurance kind of can be a leading indicator. First of all, if something, with maybe a caveat here, but if something's becoming more difficult to insure, that may be giving you a message. I know you live in Florida. I don't want to alarm you, but that is certainly an example. On the other hand, insurance can be a way to kind of drive better risk management practices, because in some areas, and this takes me back to the cyber example, you can't get insurance unless you can actually prove that you are kind of managing your cyber risks in a certain way. And going through that exercise is helpful for the management. It's also helpful for the board, because it's kind of like a external, bit of a sign off, seal of approval or whatever. So I do think kind of looking to what's going on in the insurance industry actually can be a good way of picking up signals of different types of emerging risks.
And is it very localized? I mean, you said obviously if I can't get flood insurance in Florida, then it's probably because we've had a few people are claiming on their insurance. But is it localized? Is insurance quite localized, or are there macro kind of economic impacts as well?
Yeah, so really it's both. I mean, US is a little bit strange because insurance is regulated by the states, which it isn't in most countries. So in that sense, it's more localized. And you can also see where there are particular, where you're getting some very high awards in courts in certain states. It's really causing a strain for the insurance industry, but also for the local economy. So we saw actually some reforms, particularly around climate-related risks in Florida. We're also seeing, for example, some what they call tort reform in Georgia, because otherwise the market was really unsustainable. So maybe it's a leading indicator for politicians as well, as corporate board members. But there definitely are trends, particularly in terms of, well, either kind of global risk, so that takes me back to climate related things, and also new technologies. So, AI is something that is impacting, well, certainly most countries in the world, to a lesser but certain extent. Also things to do with crypto are starting to at least impact quite a lot of countries. So the interesting thing about insurance is when these new risks pop up, on the one hand, it's a challenge because maybe it isn't something they were thinking about when the policies were originally written. They don't know how to price for it because it's new. We had the same issue with terrorism going back a few decades. But on the other hand, it's an opportunity for a new line of business. And it'll be interesting. Cyber is still definitely a developing market. It'll be interesting to see what happens with things like AI and crypto.
So tell us about crypto. So cryptocurrency. Why should boards be thinking? Well, how should boards be thinking about it, right, as a potential opportunity or a risk?
Yeah, so I guess, my concern here and why I've been writing about this is that I didn't feel that most boards were thinking about it at all. Of course, there are some companies that are in the crypto space. That's completely what they do. They have board members from that space. Maybe they have a different problem that they have all board members from that space who might lack the perspective on some other things. But for most what I call mainstream companies, it's kind of like, maybe they've heard of Bitcoin, maybe some of the board directors have owned some Bitcoin, or their kids do, or whatever. But at the most, that was the sum total of it. And now we're getting to a situation where things that are happening in the crypto world in different ways are much more kind of impacting companies across a number of different sectors. So to take a few examples, first of all, some companies are indeed investing in Bitcoin and other cryptocurrencies, sometimes just like a normal investment, but we've actually seen some companies becoming these kind of, I think they're called digital asset treasury companies, where they've kind of turned from being a tiny little company doing technology or biotech or all sorts of things to becoming a kind of crypto holding company. And that is, well, if you're on the board of one of those companies, you need to think about this is really a change in strategy. And it certainly could introduce, quite a lot of volatility. It's going to appeal to completely different types of shareholders, that kind of thing. And you have to think about, can we actually manage this properly? What are the parameters for when, for example, you can buy or sell Bitcoin? Are we satisfied with the custody arrangements? Board members don't spend a lot of time, or at least they didn't until Silicon Valley Bank collapsed, on looking at which banks the companies were using. But you need to make decisions about custody of crypto, whether you're going to do it yourself, whether you're going to, are you going to have it done by an exchange or a bank or this type of thing. And there are more options now. It's becoming more mainstream as well. We're going to see, high street name banks get, moving into this space. And then even if you have absolutely no intention of investing in crypto, the latest thing that I think is going to impact a lot more companies is stablecoins. And stablecoins are, there's just been legislation passed in the US that defines what a stablecoin is. But basically, it is a digital asset that is backed by a fiat currency. So most of them are backed by the US dollar, but there are stable coins backed by other currencies as well. And I think this is going to quite disrupt, in a positive way for the consumer, but not necessarily for the incumbents, areas like international payments and foreign exchange and things like that. So it may be that you're on the board of a company in one of those areas. If so, it's highly likely that you have a strategy for stable coins. You may be on the board of a company that is kind of maybe slightly on the edge of this. For example, a community bank. Are you going to get directly involved with these things or not? Are you looking for partners who can help you to do it? What happens if your customers say, "Hey, I want to buy Bitcoin. Can I use my such and such account or credit card to do it? Do you want to link up with one of the exchanges, etc." And then there are going to be companies outside of financial services. Think about import, export. Anyone who has lots of international payments, they want them to be faster, more efficient, cheaper, and all the rest of it. And so they are certainly directly or indirectly going to be using, things like stable coins. And then the final area that I would mention, which we don't know how this is going to play out, but is, I guess what I'd call tokenization of assets. So, people are talking about tokenizing shares, right? And there are all sorts of opportunities, but there's also a lot of complications with that. But then, tokenizing, there's a hotel that's been tokenized, right?
Wow.
Not very successfully, I should say, but
okay.
Tokenizing commodities, tokenizing gold, but potentially, in the medium term, we could be talking about tokenizing receipts or all sorts of things. So some of this is relatively far away, but given the way things are moving, I do think even if it's, boards are looking at strategy several years out, right? And so even if this isn't something that's going to happen today, it's important not to fall into the trap of kind of overestimating the short term and underestimating the long term.
No, absolutely. And you just reminded me that I think probably in 2021 or something, I bought some random crypto coins, which I don't think are valued or any worth anything. So yeah, it's a risky business. Luckily, I didn't put a lot of money down, but yeah, it is a risk. It's like any other investment though, right? Let's go back to insurance real quick, because I know there's something that you always talk about, which is that the boards and often senior leadership teams don't put enough attention to insurance policies that the company has. And often that is overlooked, or it is just not an agenda item. And because you've been in the insurance industry, you know a lot about how, businesses can potentially save money, or, there are opportunities there. Tell me a little bit about that, because I think that could be really helpful to our audience here who sit on boards, and these might be questions that they'd want to ask. So maybe some insight into that would be great.
Sure. So, I think a lot of times board members just ask about and maybe look at the D&O policies, right? The directors and officers insurance. And definitely anybody who's joining a board, whether it's public, private, even not-for-profit, should be looking at that. What I tend to see is that kind of, buying insurance for the company tends to be done by a group within some kind of risk management or compliance or legal or something like that. And there are a couple of problems. They can be a bit isolated from the real business. So kind of like knowing what the real risks are, knowing what's kind of, in the pipeline. And as you mentioned, the C-suite and even more so the board doesn't really know what's going on. So I actually recommend companies, not constantly, but every few years, maybe every 5 years or so, to actually run a process, like an RFP process for their insurance broker. And the reason why that's a good idea is you can kind of benchmark So it's partly about, about the price and the service, but also getting new ideas. Are there other types of insurance that maybe your competitors have that you don't? Could you maximize the value, for example, by having higher deductibles like we might do on our home or car, for example? And this really links in with overall risk management. So my concern is that insurance is seen as a kind of separate thing, and really it should be integrated with risk management. So, what are your risk tolerances? Because if you are okay with having, maybe a $500,000 or $1 million or multi-million-dollar loss in one space, why, for example, would you be buying insurance policies with no deductible? It makes no sense. You're paying a higher premium when you really don't need it. And as companies grow or change what they do, they need different levels of insurance, different types of insurance. Funnily enough, I was speaking to somebody the other day who's an insurance broker, and his company has made a big focus on crypto. And he said that now that companies are thinking about, investing in crypto, he's getting all these calls like, oh, is this covered by our insurance policy? What are the implications? Do we need new policies? And for example, he was suggesting, yes, you also need a financial crime policy, as well as making sure that, your D&O and E&O and everything, it is okay. So without stepping on management's toes, I do think that once a year there should be kind of a discussion of insurance, how it fits in with overall risk appetite and risk tolerance. And then, as I say, every few years, it's a pretty good idea to have some kind of competitive process. And by the way, same thing with employee benefits.
It's a really interesting thought, though. Who in the company is generally overseeing the insurance policies? Like, is it sort of dependent on where it is in the business? That part of the business takes care of it. What does that look like?
So it depends on usually what the kind of structure of the management team is. So if you have a chief risk officer and a kind of separate risk department, then it often sits there. Although, if it's a big company, it can be kind of a bit far away from the real enterprise risk management. Otherwise, usually it's the CFO, because it's seen as, oh, this is a cost, we have to pay the premiums, which is true. But CFOs probably don't have a risk management background. And so they're not necessarily, they kind of want to save money. And the thing is, you don't know if the insurance policy is good or not until you have a claim and something goes wrong. Either they don't pay enough, the service is horrible, or whatever. So I think that is part of the problem. There needs to be a bit of education for the management team and the board. And honestly, I think that insurance brokers could do a much better job there. They also probably see it as a cost. We have to do a presentation, we have to show up and talk to people. But perhaps if they knew it was going to be a more competitive process, they would actually kind of take that part more seriously, because there's no doubt that in the insurance industry, you can get a lot of added value out of your insurance broker, also out of insurance companies, and for insurance companies from their reinsurance companies, if you kind of know what to ask for.
No, I think it's quite complicated, and like you said, you need an insurance broker, you need somebody to go back to. So yes, I think that the oversight, it makes perfect sense that the oversight would sit with the board. Well, thank you for this. I know we've talked through the insurance industry, we've talked through crypto, and we talked about insurance policies at the board level. Is there anything else, and of course your career on boards, but is there anything else that you would like to share with us today?
Well, the other thing I would just say for people thinking of getting on boards, and also who are on boards, which I very much enjoyed, but it is a commitment, is the kind of continuous learning. Mm-hmm. I've had the opportunity to do some great courses in some, great business schools and so on, with fantastic people from all around the world. But there's also a lot of cool things online, like your podcast and other kind of webinars. I now listen to several podcasts to do with boards and also to do with the sectors that I'm particularly involved with. So there is a lot of interesting things out there, because with the pace of change now and all these kind of new risks and opportunities popping up, board members and prospective board members really need to be up to speed with what's going on.
Yeah, absolutely. And you're right. Like, you don't join a board and then you stop learning, right? It's almost like it starts. That's when it starts, when you join the board. Well, thank you so much for sharing all of that. And I feel like I've learned a lot here today as well. So thank you for joining me, Susan. And I'm sure we'll catch up soon.
Thank you.
Thanks a lot. Bye.